investor research, Jessica Inskip. So Jessica, there's all kinds of things out there trying to describe this big RTX news, and I thought this was one of the better tweets out there. The laptop hasn't changed in 30 years. Nvidia just changed it. This RTX Spark, again, it's the line here is that your AI agent lives in a machine 24/7, no cloud. You love this move as well, don't you?
I absolutely do, because it does increase that moat around NVIDIA. And I actually think there are two stories that strengthen NVIDIA's bull case, which is what's happening with Google financing and RTX Spark, because that highlights NVIDIA's ambitions to bring AI computing just beyond the data center and into workstations, its consumer PCs, it's eventually homes. And so it's a full stack compute company, just like your previous guest said, much like the early innings of Apple. Like we think about what Apple did with iPhone, they won because it controlled the hardware, the software, and the ecosystem. NVIDIA is following and pursuing a very similar structure with AI infrastructure.
I'm going to talk to you about Alphabet, Google in a moment. But let's talk about the big winners from this, because, again, these stocks have been absolutely on fire. Microsoft, Dell, HP, Taiwan Semi. You've been holding a lot of these kind of names. Are you taking profits along the way, or do you see it as sort of an extra boost in all of this?
It's important to take some profits off the table so you're not overly concentrated. I have a very strict rule when I'm trading where it's 2% of one security isn't more than my portfolio. And I think that's important, but that goes to personal risk tolerance. But when we're shifting to consumer AI, which this is just a component of it, there was a bigger story. I want to argue about what's happening with Vera and how that's adding more to the backlog.
You're reading my teleprompter. We're going to bring that up.
I'm sorry.
In fact,
I'm sorry.
let's bring it up right now, because this Vera Rubin is mind-boggling. And of course, this is where we are, and they're ahead of the game. There's still Feynman to come. So let's talk about Vera Rubin and why you say that's even bigger. This is the data centers and all the ramifications around it.
Well, because it means that we're finally have something that's fully running that we haven't seen before, per Jensen Huang. And that's a big deal to me. But what I want to be very cognizant of, and I'm sorry I'm going back on you, but I'm going to bring it together, I promise, is if we're focusing on the consumer and we're talking about CapEx spend, it's at what point do we stop CapEx spend where it's affecting the consumer and that slows down? And if you were to look at correlations to the dot-com bubble, it's when that component of GDP, which is part of the build out adjacent to the AI infrastructure, peaked. It's kept going, but it didn't accelerate as high. And was 3 years prior to the downturn. So that's step number one that I'm looking for if we're looking for correlations. But what debunks that is really what's happening with Google. And this is going into some deep weeds and details here. So when a company like Google, Alphabet, they commit another $80 billion to AI infrastructure, and it's near all-time highs. It's through equities. So it's effectively saying that the returns justify the investment. And normally we'd say that would dilute shares and that wouldn't be good. And that's a bearish case because newer companies need to do that for liquidity. But because of the backing with Berkshire Hathaway, it actually weakens one of the biggest bear arguments that we have, that hyperscale AI spending won't earn its cost of capital. And so I think that strengthens the bull case for NVIDIA, even with Google. And today with it selling off, I think that's just a playbook of, oh, we're issuing shares, therefore it's diluting. That's just naturally a sell-off. I think it's a great buying opportunity there. And it strengthens, once again, more infrastructure spending means compute demand. So it's really good for NVIDIA as well. That bull case is just strengthening so much, but so is the CapEx cycle from peaking.
And by the way, I think that Berkshire part of this really mitigated a lot of anxiety. And people should know now there's $26 billion. I think it's their fourth largest holding. And again, to your point, they wouldn't have made it without. But you do, I did see your notes though, you do see, or you do point to some increased speculation out there. You're a little bit antsy about some things. All the ETFs that are popping up, these IPOs. What do you say to people who say that, they're saying, hey, it's obvious. There's a mania out there. What we've got right now is akin to 1929. What do you say to people who say this is just too much, too fast, and it's going to blow up soon?
Well, I'd say it's hard to keep up with AI. It is too much. It's maybe not too fast. And I'm not sure if it is going to blow up soon, but I think there's pockets of it. So there is speculation creeping in, but the market's very earnings driven. The rate risk is subsiding. I think that has to do with Google financing as well, because of an increase on the SOFR and why they might have issued equity. But you have to be exposed to AI infrastructure build out right now, at least in the short run, because it has a ton of momentum, which means we have volatility momentum, especially with the influx of the retail trader. So in the long run, it's just true productivity enhancements that we need to see. But the speculation is now retail just wants so much exposure to it. So like you said, the 41 AI ETFs, SpaceX rumored at 80 to 100 times forward sales, index inclusion being relaxed, adding immediately, but off of a float, so not as exposed as one would think. With Anthropic, that coming in, and
so you can see the
AI,
anxiety, but the same token though, we're not there yet. I gotta hop in 30 seconds, but the big question I've been asking, and I talked about this last week on the show, trillion is the word that's going to start rolling off our tongues. We're going to use it so many times. What's your next $1 trillion stock? What do you see on your list that becomes the next $1 trillion stock?
So I was in between two for this one, because if we think about who became the $1 trillion stocks, it's when they shifted. So Apple stopped being a hardware company, became a services platform. Microsoft stopped being software, became cloud. Nvidia from gaming to AI infrastructure. So thinking out loud, Oracle immediately came to mind. But something that I think is better is actually Eli Lilly, because of GLP-1s. Their revenue is growing. It's accelerating, not deaccelerating. They've got some great margin profiles that it resembles more of a software business. And that TAM keeps expanding because of GLP-1s and the use cases that are expanding for that. So
I mean, it might be
not AI related. Look at that.
And I love it. You know what, though? It is technology, though. It's a different kind of technology, and it's serving mankind, humankind. Jessica, great talking to you as always. Thank you so much.
My pleasure.